Hey everyone, happy Thursday, April 17th. It's about 10:40 in the morning on the West Coast, and it's time for another market update. Well, things calmed down a bit this week. Stocks have still been really volatile. I think they're down about 400 points today. But bonds, which has a big effect on mortgage rates, have settled down a little bit. There's been a little bit more of the flight to safety. With stocks down, people take money out of stocks, put them in U.S. bonds, Treasury yields, things like that. So that's been helpful for us. So it's good to see still stocks going crazy, up and down each day, but our stuff is settled down. So that's been nice to see. Still a lot, still a big focus for the markets, obviously tariffs. Like we talked about before, I'm not going to go too much into that because we really don't know what's going to happen. We don't know what's going to happen tomorrow. We don't know what's going to happen 6 months from now. There's a lot of, conjecture out there, but, we don't know how this is all going to shake out. So until we do, it's going to be hard to predict. Not a lot of data this week, but one thing we did get was March retail sales. So basically, how much we're spending out there as Americans. That came in at plus 1.4% month over month. A little hotter than expectations. I think that was 1.3, but a lot of that was fueled by autos. Auto shopping went up 5.3%. So what basically they're saying is a lot of people, to get ahead of the tariffs, went out and bought cars because they know that's something it seems like it's gonna jump quite a bit on us is the cost of a car. So big jump in auto sales that made that headline number jump up. The core number only came in at a plus 0.4%, was supposed to be a plus 0.6%. But again, the market didn't pay too much attention to these numbers just because they expected the jump in buying because of the tariffs. And with everything else going on, they're a little distracted. The main thing I want to talk about today is, we're hearing a lot on the news. You're seeing different CEOs, predict whether or not we're going to have a recession this year and so forth. But, how do we know when we are in a recession? There's before I got in this industry, I didn't really know there was actually the National Bureau of Economic Research is the one who decides if it's a recession or not. So whether or not it feels like a recession, and it's not officially a recession until the NBER says so. One thing they used to have as a rule of thumb was, two negative quarters in a row of negative GDP in this country. That's a recession. But we had that, a couple years ago in the pandemic, and they didn't call it a recession. So that one's kind of gone away. But there's four main pillars that they're looking at to make that recession call. So the first one is jobs. We've talked about that a lot. Jobs weakened. That obviously our economy's slowing down, but the jobs have stayed pretty strong. Unemployment numbers are still low and so forth. So that is one part of this recession call that really hasn't happened yet. Everybody's been thinking it's going to happen, but really that shoe hasn't dropped yet. The second thing we have as part of it is real personal income, excluding government transfers. So, this is barely positive year over year. Like they said, could turn negative. Wages continue to slow and our inflation rises. So that's ones, we're more likely to see here happen very shortly with, being barely positive year over year. So, and as inflation goes up, income doesn't stay up with it. That would play into that. The third one is industrial production. So this is solid, but actually, since this graph, or this graphic came out just yesterday, I think we got industrial numbers, and those were actually really low. So that's one that is starting to trend in that direction too. It looks like industrial side of thing is slowing down. So we got two out of the three so far. They're kind of showing, maybe we're headed towards recession. And the last one is real manufacturing and trade sales. So recent decline, but again, trade sales with tariffs and everything going on, that obviously can have a big effect. And a lot of the economists think that will make all those numbers fall. So if that happens, then we'll have three out of the four, and really the only thing propping it up is jobs. So again, keep in mind we're not in a recession until the NBER says so. And also keep in mind, like we've talked about, a recession, for mortgage rates tends to be a good thing. Rates tend to drop, and for housing values, they either tend to stay, flat or rise during recessions. Besides 2008, which again was caused by housing, wasn't, like this one will not be caused by housing, be caused by lots of stuff. Again, initial jobless claims, like I just mentioned, still really low. Estimate was 225,000 new claims, came in at 215,000. So that's one shoe we haven't seen drop. We haven't seen, these initial jobless claims, start spiking. With until we see that, it's hard to say that the job market's in trouble. So everybody keeps waiting for that to happen, but it really hasn't happened. It's been very consistent in this 210 to 230 range for years now, it seems like. Where does that leave us? So the average 30-year conventional, last week it jumped to 6.95. By the time Friday ended, I think we were at about 7.10. So gone up over a half a point in about a week. Today we're at 6.87. So we have actually dropped, almost a quarter of a point since then. So again, that had a lot to do with, like I said, bonds settling down, a little bit of a flight to safety, a little bit of a give back today with the weaker jobless claim numbers, but overall a pretty good week for us considering how bad last week was for us. Bad last week was a really bad week. So good to see there, but again, still a lot of volatility, still hard to say we're out of the clear yet because we just don't know what's going to happen next in the news. So important dates. These are the big reports coming up, and then the Fed's meeting on May 7th. So we have the PCE inflation report on April 30th. We have the BLS jobs report on May 2nd. And like I said, we got that Fed meeting on May 7th. Right now, it's a 10% chance they cut, 90% chance they stay put. At one point over the last couple of weeks, I think that got all up to almost 50, I think it was 40% chance they would cut, but now it's back down to 10%. The Fed's got a lot of stuff going on. This morning I see that President Trump is wanting basically Chairman Powell to cut rates immediately, or he wants to get rid of him. So there's a lot going on with the Fed. It's the Fed's kind of outside. It hasn't gone to court yet, but you're not sure if the president has the power to fire a Fed chair. So not sure what's going to happen there. Not sure if the Fed that makes them less or more likely to cut rates if being threatened to cut rates. But I just worry that they're going to dig in their heels and get stubborn about it. People in power tend to do that. So be interesting to see what happens there. But right now, it doesn't look like they're going to cut anytime soon. So we're going to just have to play that by ear. And again, just like this tariff stuff, this really is throwing a wrench into everything. It's hard to say what's going to happen with all that still really undecided how it's going to shake out. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, enjoy the sunshine out there and have a great Easter. And I'll talk to you guys soon. Thanks a lot, guys.